Work management platforms. Ugh, endless onboarding, IT bottlenecks, admin requests. But what if things were different?
We found love in an open space.
Monday.com is different. No lengthy onboarding. Beautiful reports in minutes. Custom workflows you can build on your own. Easy to use prompt-free AI. Turns out you can love a work management platform. Monday.com, the first work platform you'll love to use.
This episode is brought to you by Audi. The road is calling. Embrace the thrill of the drive with the all-new, fully electric Audi Q6 e-tron. Featuring effortless power, serious acceleration, and advanced Audi tech. It's not just a new EV, it's a new way to experience driving. The all-new, fully electric Audi Q6 e-tron is here. The next chapter of Audi starts now.
Welcome back to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we're of course going to review what happened last week in the market, and we're also going to get into GDP numbers. What happened in the last 2 quarters of GDP and what we're anticipating to take place in this current quarter. We finally broke a 4-week losing streak in the market. This is a much welcome relief. The weeks before last, 4 to be exact, were all losing weeks. And so it's nice to experience this relief, especially as investors. While last week's modest rebound was encouraging, it's definitely not going to turn into a rally or anything like that. We can only expect things to get a little more turbulent as we anticipate tariffs on April 2nd. And then, of course, as we anticipate GDP numbers at the end of this month. So we still have a lot of news that is going to make the stock market pretty volatile. We're going to get into GDP and we're going to talk a little bit more about tariffs. But before we get into that, I just want to go ahead and go over how we performed last week. And then I also want to go over how we performed in the last 6 months, and then some reminders on patterns in the market. Last week, the Dow Jones grew by 0.95%. The S&P 500 grew by 0.3%, and the NASDAQ grew by 0.7%. All of this growth took place in 1 week. I know that's not really impressive, but you know what? A win is a win, and I'll take it. I think it at least tells us that the stock market is settling in right in and around these levels. At least it's not another loss. Of course, I think it is bracing itself for the potential news that is ahead of us. I wanted to also go ahead and look at the last 6 months because the market has truly done absolutely nothing in the last 6 months. The Dow Jones is down 0.33%. The S&P 500 is down 0.89%. And the NASDAQ is down 0.6%. Also, when I say that the stock market has done absolutely nothing, what I mean is that we are at the same levels that we were 6 months ago. I really want us to think about this. Of course, the stock market has done something. We have seen exponential growth as soon as the market anticipated Trump taking the presidency. You all know how I feel about rapid growth. It makes me extremely nervous. I do not like it. I am the person that gets excited when I see a down market, and that's what we are in. All of the growth that has taken place in the last 6 months has been completely wiped away. And so I want us to really reflect on this because right now is the time when we should be building our portfolios. This is a time when we lean into all of the gains that the market has lost. This is where we build strength. Now, with that being said, I also want to highlight a very dangerous trap that starts to take place in and around these times. Just because we are looking at inexpensive stocks or cheap stocks across the market, that does not mean that we should buy everything that has gone down. There will be stocks that will not recover. Most of these will be speculative stocks. What we need to be leaning into right now and what we need to be strengthening in our portfolios are blue chip stocks. Stocks that we know that the United States of America is dependent on. Stocks that we know that the world is dependent on. Do not make the mistake and look for speculative stocks that right now may be very cheap. They are cheap for a reason. Build the stocks that are strong but are inexpensive at the moment. When we look at patterns in the market, there's also something really important that we need to consider. Historically, early March has been a strong month typically. However, again, we are in this post-election year where the same rules do not apply. Historically, the stock market has been known to perform much better during a Democratic era versus a Republican era. However, on the flip side of that, during a Republican era, the dollar has been much stronger. So knowing that historical component to the stock market, it really can help prepare us to understand that we may not expect a lot of gains during these next 4 years. And this is exactly the time that we should be leaning in to our portfolios and building all of our positions so that we can prepare for the growth that will take place during a Democratic era. What's also really important for me to highlight here that most people that invest in the stock market are Republicans. And so they win whether we are in a Republican era or a Democratic era. They win because they get to build their portfolios and they get to reap the gains from their portfolios. Meanwhile, the majority of us are not participating, and that is where we lose. So I want us to just get our minds prepared around all of this. And it's important for us to understand that these historical patterns might be by design, because the way you truly build your wealth is during a down market. I want to share with you all an investment case study that I pulled from the Stock Trader's Almanac under a section where it goes over the historical patterns of the market performing better under Democrats and the dollar holding up under Republicans. In this case study, it says that a $10,000 investment compounded during the Democratic era would have grown to $757,419 in 60 years. The same $10,000 investment during 64 Republican years would have appreciated to $115,682. That is almost 7 times growth under a Democratic era. Can we really think about that for a moment? It really behooves us to have these moments where we have Republicans in office and utilize opportunities that are at our disposal.
On average, you'll have to wait 31 days to see an OBGYN. And if you're dealing with an infection or outbreak, you know you need care fast. That's where WISP comes in. Connect with a U.S. licensed provider online and pick up safe, effective treatment at your local pharmacy that same day. Plus, get birth control and more delivered in all 50 states. Take control with comprehensive sexual and reproductive care, all from your phone. Wisp. That's hellowisp.com. The waiting room can wait.
From ADT comes Trusted Neighbor, the new standard in home access. Through the ADT Plus app, easily grant and automate event-based or scheduled access for neighbors, friends, and helpers. Notify trusted individuals of events like alarms or packages, and set access windows for planned guests or even the dog walker without interrupting your day. Visit ADT.com. When every second counts, count on ADT. Requires ADT Complete Pro monitoring plan and compatible devices. Copyright 2025 ADT LLC. All rights reserved.
Now that we've reviewed the last 6 months of the market and we have identified that we are in a buying opportunity, well, actually, before I go into what I'm going to say, I want us to pause right here because I want to take a little bit of my glory and I want to remind you that 3 months ago, for my folks that have been invested in the market for 5 years or more, I told you this is a time to consider selling out of some of your stocks and consider rebalancing your portfolio because I felt like we were hitting an all-time high and it was going to be downhill from here. And so I just want to say, for the record, that was the right decision. And now here we are, and we are in a buying opportunity. Now, and when I say that, I say it with a grain of salt. This doesn't mean that we've hit the bottom, okay? We have news that is going to continue to make the stock market turbulent, and that's what we're going to get into next. But this is when you start to buy in your portfolio and lean into the opportunity that we have. I know I keep saying that over and over, but I just want to drive the point home. GDP. What is it? Why is it important, and why can it potentially make the stock market volatile? Now, GDP stands for Gross Domestic Product. It measures the production of goods and services, and most importantly, it tells us whether or not we are in a recession. In order to identify a recession, we need to have 2 consecutive quarters of a declining GDP number. That has always been how we calculate a recession. However, during the Biden administration, they changed how we calculate a recession. Probably because they didn't want to have a recession under that administration. And so they added the clause that yes, it is 2 consecutive quarters of declining GDP, but it is now also includes a weak job market. So even though historically it's always been 2 consecutive quarters, at the time during the Biden administration, we did have a really strong job market. And so they used that opportunity. I'm just going to say it and be completely transparent. I think the reason they did that is to remove fears of a recession, gaslight. I don't know. I am very upset that that was done. We'll see if that new definition holds up or if we go back to the original historical definition of a recession. So the problem here is that we did have 1 quarter of declining GDP in Q4. So Q4 of 2024, the GDP was at 2.3%. Analysts were expecting a 2.5% GDP. In the quarter prior to that, Q3 of 2024, we had a 3.1% GDP. It was revised. Originally, the GDP came in at 2.8. Analysts were expecting a 3.1, and then it was revised to a 3.1. This was in Q3 of 2024. So we went from a 3.1 to a 2.3. Now, in Q1, if we have a declining GDP, then we are going to be in a recession. And so there are, of course, concerns And the market will absolutely react, because if there's less growth in the market, that is a direct hit on publicly traded companies. And so we will start to see the effect on earnings reports and across the board in households. The GDP numbers are set to be released on April 30th. We, of course, already have analysts that are anticipating a declining GDP. So we will wait to see how much volatility that will bring into the market. But I think that this type of news is what is going to hold us back from entering any type of rally, unless something spectacular happens. Now, up next, as I mentioned earlier, we have tariffs. So those two in combination, I think, is going to keep us here in and around these levels. Again, we are in a buying opportunity. There's never a reason for us to fear recessions. Millionaires are created during recessions. This is a time where our money can grow. It's an opportunity to lean into all of that, even if it's just spending your time learning about how to invest. That is also a type of investment. Learning about recessions, learning about the economy, that is also an investment that takes $0. It does cost time, but it is time very well spent. This has been your weekly update on Investies. I hope you enjoyed this week's episode. If you did, do me a solid. Can you please rate and review this podcast if you have found any value in it? I appreciate you taking the time to do that, investing it in myself and in my team. When you rate and review a podcast, it really helps to amplify the podcast. So it is much appreciated. You're listening to Investies, a Cosmic Standard and In Luz We Trust production. A very special thank you to the team, Asia Simpson, Eliza Smith, and Jacob Winnick.
You just realized your business needed to hire someone yesterday. How can you find amazing candidates fast? Easy. Just use Indeed. Stop struggling to get your job post seen on other job sites. With Indeed sponsored jobs, your post jumps to the top of the page for your relevant candidates, so you can reach the people you want faster. According to Indeed data, sponsored jobs posted directly on Indeed have 45% more applications than non-sponsored jobs. Don't wait any longer. Speed up your hiring right now with Indeed. And listeners of this show will get a $75 sponsored job credit to get your jobs more visibility at Indeed.com/PODKATZ13. Just go to Indeed.com/PODKATZ13 right now and support our show by saying you heard about Indeed on this podcast. Terms and conditions apply. Hiring? Indeed is all you need.